So there's a lot of overnight action to really reflect on, especially starting with what the Federal Reserve did. Now, if I just look at the YouTube videos overnight, people's reaction, it's like they're all in shock because, like me, a lot of people were listening to the Fed and expect them to really go through with what they are saying. But the history of it is that they don't always do that. The real and they have a bigger objective, right? They've got to keep funding the US government, so they can't break the bond market. And they've really got to keep the US economy from falling apart. And so they would ideally like to bring down inflation with a soft landing. So that was the scenario. But the Fed was doing what is permitted in monetary policy, that is using language or words as a means of communication to really push monetary policy. So it doesn't mean that you have to actually take actions, but it means that you have to sound serious enough that you're going to do something. And they've sort of used that mandate between August and December pretty loudly, scaring everybody, including myself. And then at that point, it started looking like things were really not tightening as much as they should have by December. A lot of things, a lot of US stocks had already crashed, but the US indices were somewhere holding ground, getting oversold, and looking like they are ready to make a comeback. And so that became the initial sign that something was changing, which is what drove my view from the start of January, and it started to play out initially in Asia, Europe, and now the US. I think everybody who was doubting it should now be seeing it after the change in just the language of the Federal Reserve in last night's policy announcement. So that sort of sets the course of what they're going to do in the months ahead. They're going to keep watching data. They're going to try and hope that inflation comes off. They're going to wait for that long, and then as quickly as it falls, they're also going to back off and turn the other way because they need to support the economy. So they made that clear. He made it clear in words: if inflation falls fast, we'll also have to respond faster. And that sort of sets it up, and so that is why the markets were a little jubilant. So they're going to slowly keep edging higher as data keeps improving on the inflation front, in hopes that the rate hiking cycle is over. And in any case, while they are doing QT, they have been injecting liquidity from other fronts, and that is why the impact of the liquidity tightening has been somewhat pulled over, and it is also then a case for the soft landing that they want to achieve. So this is where it is. And so therefore, if liquidity is still high, Japan is still buying bonds. They bought the highest amount of bonds in January, after they raised the reference rate, and then they said we are still going to buy bonds, and they bought a lot more at the higher rate. So they're still supporting their economy. Europe is the only one stuck somewhere in between. I don't know when they will pivot, but in general, markets are anticipating that. So should we listen to the market, or should we think about narratives? And so at times like this, you listen to the market. So every market, so if you go back now, and for those who've read the long short report, everything we've said there is sort of playing out in global markets, including even the Indian 10-year G-Sec. So I was talking about the potential that yields peak out and roll over. We actually have the Indian 10-year G-Sec, sort of peaking and, rolling. So here is a look at the Indian 10-year G-Sec yield chart. After yesterday's event, it didn't get to this upper line, but did sell off. This entire advance looks very overlapping and triangular. Now, the main thing to watch out for, if this is a topping triangle, is that yields should drop below this lower line. This lower line is currently at around 7.2339. It's showing 239. So once we go below that, especially on a closing basis, then I can actually think of bond yields cooling off further from here. So that would then end up being a positive signal, slightly more medium term for the Indian market, and that's going to be something to really watch out for. The other thing is, of course, key supports holding across the board. One of the charts that I've published recently at Indiacharts has been the mid-cap index. The mid-cap and small-cap indices are holding this trend line of the lows, which is all the way from September. We came back to this level in December, and then again now in January. So it's sort of a triple bottom. We have three bottoms here. And if this bottom holds, then this is a very good continuation pattern. We call it a running triangle in elate wave term. So it's not a triangle. It could be a complex structure, W, X, Y type of thing. But whenever I've seen this structure, we've seen meaningful rallies come out of it, which is why I would actually be a little optimistic in terms of how it ends. It's not happened yet, but like I said, there's an eventuality to this which we need to watch out for. So the other indices, of course, are all at retracements. The Nifty 50 is trying to hold this retracement line here. The Bank Nifty also trying to hold a retracement line all the way from the bottom of October to September. 66% is what it's been closing above. We'll have to see whether that can be maintained with all the news flow around the Adani group. But as I started off, one place which is cooled off has been the US markets, right? So the dollar also dropped, bond yields dropped, all of that happened. You didn't see much action in the oil market yet. That's a tricky place. I'm not sure what happens, but equities rallied and the VIX continued to fall. Yesterday, as I was in the studios, there was some discussion of whether this can be the baseline for VIX, but the VIX has actually been not in the studios. Actually, it was the Forex analytics interview webinar day before. The VIX has fallen below this neckline, okay, at around 20, and this break of this neckline sort of puts it into bullish territory. Usually if it stays above the neckline and then you get another spike in the VIX, that's when crashes happen. But instead of doing that, it's broken the neckline and is heading down, which is when extended bull runs happen. So you will get short-term spikes in the VIX at some point, which may be the cause be, at the time whenever there's a unexpected sharp correction and you get a VIX spike. But it may not be a trend reversal for the VIX yet so easily. So now you'll have to give it time and wait for actual weakness and an actual reversal in the VIX. Just a day spike or a 3-day spike should not be seen as a reversal in trend. That said, the daily sentiment index for the US VIX is very, very low, 13%, 9%. Such low readings are sometimes associated with near-term lows, but we are not seeing that. Why can't 9 become 5? So in the structure of the S&P 500, we can't see that. It's actually broken past all the trend lines. If I take the trend line of the last two lows that happened earlier, if I take it from the major top to this top, that has happened in the last few days. So however you take it, we are sort of past all the potential resistance lines that we could have drawn for the S&P, and the same is also true for the Nasdaq. So if I take the NDX, which is the Nasdaq 100, it has gone past this line in the last 2 days, 3 days, did dip back below it, but went past above it again. And if I take it from the top, then that was already done. So in all of these cases, it will appear like you're out of the woods as far as this decline is concerned. Now what you're doing is two possible things. One is a larger retracement of this, and second is that you actually started a recovery phase. Fundamentals always lag the market. Market got extremely oversold. The sentiment at these lows was like the most bearish since probably the last bear market, and that is why one of the reasons why I actually changed my view. And if sentiment is that poor, then are you starting something new on the upside is also a second question mark. So start with a retracement, but be open to the entire narrative changing as we go along, because too many people start believing in too many things, perpetually going one way, which is to the downside into a recession, whereas we already had a kind of mild recession if you simply go by 2 negative quarters of GDP growth into October, and then now in January you're actually seeing an easing of that condition. So could be the worst is also behind. Time will tell, but markets moving on sentiment are at least out of the woods for the time being, and will hold out a little longer than most people expected. By that time, if things don't change, we can always review the situation, but right now I think we're just breaking out and starting a rally that is likely to sustain for a while. That is the net outcome, at least of the global equity. So the main problem has been India, because we've been hit by whatever is happening around the Adani group, even though most people would say yesterday's budget was a big way forward in terms of tax reform and continued spending that should be positive for growth. So that much we have done. The only problem we are dealing with is nation-specific event news and specific group, which has become large, which is something that the markets, the government, and various authorities need to figure out. I mean, one I would specifically say, it's been included in all the indices, making a mess, because things like the Nifty metal index has Adani Enterprises, which is not even a metal stock. So why include it over there? And that's why I always study the BSE metal index, which doesn't have any Adani stocks in it, and is cleaner in that sense. So whether the right stocks have been included in the right indices with the right logic, I think that's one big question mark on index managers. How they've just randomly gone and added stocks, deleted stocks in the last 10 years at the fastest pace in history. I don't think any other country manages their indices so poorly in terms of overchanging index components just to make it include the latest hot stock of the time. That's no way to really manage an index. So I think I would point fingers there. It's hard to really, I don't know how this chaos will though really end, because we don't know how much truth, not truth, is there in all the allegations, unless it goes to a court. If you look at it the other way, it will look like there's nothing, there have been no defaults yet, so what's all the noise really about? So it's something that we can't really get into. But in terms of setup, like I said, retracements are still holding. We are at weekly averages. The mid cap index is holding its support lines. We just want to watch whether next few days these levels hold and we do start what should be a meaningful post-budget rally. That's something I've been talking about. So that's what I'm watching out for. Everything else is done and dusted with the US Federal Reserve meeting overnight. I think that sort of set the course as far as what global markets are going to do over the next 2 months. The only question mark remains on how quickly India comes back from the recent chaos and crisis. And that's, I think, to be watched more technically. Does it become a market-wide event? Because many times such events are not market-wide. We've had, individual groups or companies fall apart without having that much of an impact on the index historically. And that's going to be the same case here. The question is, how fast would they, react in terms of, will the index managers remove, the group from the index and, let life go on? Is that a solution? Or they actually manage their finances and, it all looks like, oh, there was nothing. Something's got to happen to stabilize things here. How that happens is what we need to really watch. But so far, key levels on most indices holding, even after the volatility we saw behind the budget, and today morning's volatility after the NFOs actually been FPO has been pulled back, and at least what is being stated is that the money will be given back. So that's all at this morning update. Thank you.